Taxation and Public Finance in India. Question 1. In context of public finance in India, consider the following. 1. Securities issued against small savings funds. 2. Market stabilization scheme bonds. 3. Securities issued to International Monetary Fund, IMF. Which of these is our components of internal debt? A. 1 only. B. 1 and 2 only. C. 2 only. D. 1, 2 and 3. Question 2. Consider the following. 1. Revenue deficit. 2. Capital expenditure. 3. Effective revenue deficit. Grants or expenditure used for creation of assets are calculated under which of the given heads? A. 1 and 3 only. B. 2 only. C. 2 and 3 only. D. 3 only. Question 3. Consider the following. 1. Fiscal deficit. 2. Revenue deficit. 3. Primary deficit. Which of the following deficits focuses only on the present fiscal imbalances? A. 1 and 2 only. B. 1 only. C. 2 and 3 only. D. 3 only. Question 4. Consider the following with reference to Indian tax system. 1. Corporation tax. 2. Dividends distribution tax. 3. Minimum alternative tax. 4. Stamp duty. Which of the following is our direct taxes applicable to private sector companies in India? A. 1 and 2 only. B. 2, 3 and 4 only. C. 1 and 3 only. D. 1, 2 and 3 only. Question 5. Consider the following transactions. 1. Investment in mutual funds. 2. Buying an immovable property which is under construction. 3. Transfer or shares and debentures. The stamp duty will be applicable on which of the given transactions? A. 1 and 2 only. B. 2 only. C. 1, 2 and 3. D. None of the above. Question 6. Consider the following statements with reference to the composition levy. 1. Composition levy is an alternative method of levy of direct tax designed for small businesses whose turnover is up to 1.5 crore rupees. 2. The small businesses can avail to input tax credits after the payment of the composition levy. Which of the given statements is incorrect? A. 1 only. B. 2 only. C. Both 1 and 2. D. Neither 1 nor 2. Question 7. Consider the following statements with reference to the goods and services tax compensation cess. 1. To compensate states, a new tax, offsetting the revenue losses and proceeds from which will be transferred to the states has been introduced. 2. In the present design of GST, there is no provision for revenue compensation for the union government. Which of the given statements is correct? A. 1 only. B. 2 only. C. Both 1 and 2. D. Neither 1 nor 2. Question 8. Which of the given statements is incorrect regarding the tax system of India? 1. According to the Article 265, no tax should be levied collected except the authority of the law. 2. When the government reduces taxes during the recession period, it is said to be following a procyclical fiscal policy. 3. The goods and services tax, GST, is a consumption and destination-based indirect tax. Select the correct answer using the codes given below. A. 1 and 2 only. B. 2 only. C. 2 and 3 only. D. 3 only. Question 9. Which of the following documents is published while presenting the Union Budget? 1. Fiscal Policy Strategy Statement. 2. Medium-Term Expenditure Framework Statement. 3. Annual Financial Statement. 4. Demand for Grants. 5. Supplementary Demand for Grants. Select the correct answer using the codes given below. A. 1, 3, 4 and 5 only. B. 1, 2, 3 and 5 only. C. 1, 2, 3 and 4 only. D. 1, 3 and 4 only. Question 10. Consider the following statements with reference to the equalization levy. 1. Equalization levy has been introduced under the Income Tax Act, 1961 to tax foreign companies which have a significant local base. 2. It is a direct tax levied on the profits made by the companies like Google, Amazon. 3. Equalization levy is applicable to foreign companies which have a tangible presence in India. Which of the following statements are incorrect? A. 1 only. B. 2 and 3 only. C. 3 only. D. 1, 2 and 3. Question 11. The term escape clause is often seen in news in context of A. Related to base erosion and profit shifting. B. Related to interest subvention scheme for exporters. C. Related to climate action plan passed in Paris Agreement. D. Related to Fiscal Responsibility and Budget Management Act. Question 12. Which of the following statements about value-added tax, VAT, are correct? 1. It is a tax collected at every stage of value addition. 2. It is a multi-point tax collection system. 3. It has a cascading effect on the prices of goods and thus it does not increase inflation. Select the correct answer from the codes given below. A. 1 and 2 only. B. 2 and 3 only. C. 1 and 3 only. D. All of the above. Question 13. Which of the following statements about goods and services tax are correct? 1. It is a destination-based taxation system. 2. It is direct tax for the whole country on the lines of one nation, one tax, to make India a unified market. 3. It is calculated in line with value-added tax, VAT. Select the correct answer from the codes given below. A. 1 and 2 only. B. 1 and 3 only. C. 2 and 3 only. D. All of the above. Question 14. Which of the following statements about commodities transaction taxes are correct? 1. Commodities transaction tax, CTT, is a tax levied in India on transactions done on the domestic commodity derivatives exchanges. 2. It aims at encouraging excessive speculation. Select the correct answer from the codes given below. A. 1 only. B. 2 only. C. Both 1 and 2. D. Neither 1 nor 2. Question 15. Which of the following statements regarding securities transaction tax, STT, are incorrect? 1. The rates of STT are prescribed by the SEBI from time to time. 2. STT is an indirect tax. 3. STT is collected for the Government of India by the stock exchanges. Select the correct answer from the codes given below. A. 1 and 2 only. B. 2 and 3 only. C. 1 and 3 only. D. None of the above.